Hold
Okay,
on,
I'm
sec.
recording now.
All right.
Okay, yeah.
Okay, one sec.
So as a high level review, since I wasn't recording before, based upon the rate of decline, this will not lead to a recession. A recession is a prolonged period of decline. The intention right now from the market makers is to get to the bottom as fast as possible so that we don't have a prolonged period of decline, which is actually it's going to be much better for the economy in the long run. People are going to lose a lot of money, but mostly the people that are losing money here are all the people that basically are super greedy and they were using leverage long positions and they're going to be liquidated. The average person like that's invested in the stock market, with a more than 5 year time horizon on for their exit is going to be fine.
Yeah, it'll go down. It's not going to affect them because it will be back.
Yeah, as long as they don't panic sell the bottom, which some people are doing, they'll be fine. So there's a profound difference between what we're seeing here and what we saw in 2008. Right? It's not the same whatsoever. It's not even close. Right. Okay. So now to the gold chart, like why you should definitely not buy gold. So this is a normal what they call, whatever. Everyone just calls it a pump and dump in the crypto world. But what this is like an exit tool, right? Where gold was basically trading here. I don't have any more like older historical data. I probably can get it. But gold is trading basically around $300 for like forever. And for whatever reason, all the people that had all the gold in the world decided they don't want gold anymore, right? So if they started to just sell the gold at the current price, it would just basically go down here to like, $0. So instead what they do is, over a course of 10, looks like 13 years, they continue to increase the price of gold intentionally until they get it to a point where they can, basically
Dump it and it'll just normalize.
dump it all the way down, right? So now everybody else has gold and they don't have gold, right? So it's going to go back to whatever price that it was before, right? But they sold it all at a higher price, right? So basically, whoever owns the world's gold supply doesn't want it anymore. So if that's the case, like why would you want to buy gold, right? That's a real question. The next thing to be aware of is that this is like super traditional. The numbers are like identical on what we call like an ABC correction, which basically means that we go from the high point down here to a low point, which we saw was right around $1,000. Then we go back up to exactly 742. The numbers are like literally spot on, and then we continue back downwards all the way to like a 1.68. So what these numbers are, these are like multiples.
It's a rohedron or something like that.
Yeah. So what it means is that 16,000 is 74.2% of this point, 1,890. That's all it means, right? So what it means now is that we're going to see a decline by 1.68 of the distance between these two bars, which brings us at like $600.
Interesting.
So, don't buy gold. After that, we're going to see again the same thing, right? Where we had, I draw the points wrong. Another kind of ABC correction comes down here, back up to like this point. It's going to get to like $1,000, and then we just continue down again. Right. So the only thing I would do right here is short it. The only thing I would be doing with gold right now. I'd be borrowing it and then selling it.
Can you guys hear me?
I can hear you now.
Yeah.
Okay. I guess There's got to be a floor for gold, though, right? Because gold
Yeah.
is supposed to be one of those things that actually has inherent value.
Yeah, but look at these numbers, right? We're talking about exactly 2 cycles, right? 168 to 168 again takes it back down to the previous market value, which was like around $300. So the real market value of gold is $300, but it's just been pumped up so that whoever owns it all can exit.
Got it. Okay.
So, if for whatever reason you own gold, of course now you're thinking like, oh, I'm so smart, I own gold. No, you just got lucky. Somebody decided they didn't want it and you were on the train. But like now, like sell it for God's sake,
Before it goes down anymore.
I know, like, because then you're gonna be out here $300 and you're like, man, I was not smart,
I should have just dumped it.
Yeah, and in all likelihood, when you get an event like this, usually what happens, it actually goes below the previous price and then returns back up. So we could see gold at like $150, in the next 20 years.
Okay.
Yeah, well, I mean, the timeline is so long.
But yeah, that's the thing. Like with the gold chart, you have to look at the monthly. Otherwise,
it's not going to move. I guess it's kind of safe, even if you know it's going down, because it takes so goddamn long to move.
Yeah, and the reason why gold moves so slow is because there's
Like
so
the
much
opposite
of it.
of crypto.
Yeah, I mean, and look, you're only talking, even if you were down here, you're talking about 5x. Like that's nothing. Like equities have done way better than that. There's literally no reason to own gold whatsoever. People are thinking it's going to continue up. That's not going to happen.
It'll be interesting to see.
Yeah. All right. So we talked about general equities. We talked about gold. All right. Now let's look at Bitcoin. So this is like the super short-term analysis that I'm watching because I'm going to be trading this pattern. But basically, the price has recently dropped down here to like $3,800. That was not the intention. whoever basically got anywhere below $4,200 was just like pure lucky, because the chart right now is just lining up for the bottom to be like right at exactly 4,200. Right. So this is what I'm expecting to be like the absolute bottom. I have another chart here, like on the side, that I'm going to use as a reference, but I'm going to pull up another one. Let's see, BLX. So BLX is just like, it's a liquid index. Make a copy. BLX. And what it does is just basically track the price of Bitcoin like since the beginning, because there was a lot of different exchanges that were selling it, and there was a lot of different ways to buy it at the time. So what somebody did was basically just compile all the data from all the exchanges and get like averages and then put it on a chart. So that's what the Bitcoin liquid index is. All right, makes sense?
Not really.
It means that at this point of time, on average, that's how much Bitcoin was selling for. All of the other charts, like if you look at this one, this is Coinbase, right? This is the exact price that you can buy it at on Coinbase.
Oh, it's the average. Okay, I got you.
Yeah, so it's like an average, because there was different exchanges that came in and out
I
of
didn't realize
business.
different exchanges held different values. I mean, like minute, but I didn't think it would be a dramatic difference.
Well, yeah, it can be a dramatic difference when there's high volatility. So
Is that just
Delays
what
in
the index is valuing it at? Like they do their own valuations?
no, this was the like average trading price at the time. That's what the index is.
on that service, whatever, like Coinbase.
Yeah. All right, so I think I can use like the weekly chart here. All right, so at a high, I guess the starting point here is like you guys know that there's maximum 21 million Bitcoins that can ever exist, right?
I knew there was a maximum. I didn't know what it was.
Yeah, do you guys know how many exists right now?
No.
18 million.
Okay.
Right. So we're kind of getting close, like towards the end,
Uh-huh.
whatever that maximum is
Of Bitcoin.
of new Bitcoin being created.
Yeah, I
Right.
just mean,
There could be other cryptos, is what
yeah.
Jeff's saying.
Yeah. So the idea in the beginning was basically we have built-in inflation, like intentional inflation, right? But at some point, there's it stops inflating, and the reason why inflation was built in was basically to create adoption.
Create
Right?
what?
Adoption.
So people would buy it because the value kept increasing.
Well, if there was an assumed value of it, then people would want to make more of it, right?
What is that?
Yeah.
I don't know.
What is that?
Jazz?
Hello?
Okay.
No, it's not me.
Oh.
It's not me.
Now I'm mute my mic. I don't think it's
I
me.
think it might be Judd, actually. So yeah, the idea with I think it's mine or something. I don't know.
Yeah, that's your mic. Do you have the old one on that's like broken?
Oh, this mic never give me problems.
Anyways. Well, I guess I can't hear what you're.
Let me try. No, it's like still doing it.
What's wrong with your mic?
What is it doing? I can't hear
It's
anything.
like squeaking or something.
Oh.
Yeah.
No, wait, it's Jazz. No, I just said it.
Is someone getting feedback?
Someone's getting feedback. Someone
I
needs
have
to
it
put
in
a
my
headset.
headphone. It's
Maybe
not
it's me because I don't have.
A headset.
But I've been in the same place the whole time. It wouldn't make
Josh,
sense.
talk.
Or...
Hello.
Yeah, it's Tessa.
It was
Tessa.
Tessa.
Okay.
Because I've been on mute the whole time, so it wasn't me.
Yeah, no, Tessa's getting feedback. Sorry, you have to use a headset or just mute yourself until you want to ask your question.
That's fine. I was the only one not hearing it, so I started to suspect.
Okay, so the idea with the intentional inflation is like it's kind of built into the blockchain system where if I verify a transaction or a set of transactions, right, then I earn new Bitcoins. Right. So if the Bitcoins have a value because people are, sending them from one address to the other, so there's like an assumed value if you're, transacting something, if you're sending it from one person to the other, there's some type of assumed value. So if there's an assumed value based upon just, transacting it alone, then people would want more of it, right? So they would continue to confirm the transactions and thus get rewarded with new Bitcoins. Makes sense so far?
Yeah, makes sense.
Okay. So, at some point, there will be no new Bitcoins that are created. So whenever you send Bitcoins, it'll just come out of the person that's sending the Bitcoins as a regular fee. And there's already a fee right now, but at some point, there just won't be new Bitcoins rewarded in addition to the fee that already exists. All right. So there's still incentive for people to confirm the transaction because they collect fees. They just won't collect as many of them. They just won't basically make as much doing it. All right. So that's the the backdrop. So the idea there in general is basically why is Bitcoin valuable? The only reason why it held value is because it's a way to it's something that can transact commerce like anything else, like dollars, like gold, like anything that you use as like a regular base value, but it cannot be inflated. Right? Banks can't just issue more and more money forever. They can't just issue more and more Bitcoin forever. Not all the cryptocurrencies are like that. Like for example, with Ethereum, it can just be like infinitely inflated. So everybody that thinks like, oh, Ethereum is great. Yeah, if you're a banker, Ethereum is great. If you're not a banker, then that's not what you want. So I think in general, like most people don't really understand this, but Bitcoin itself does have like a brand name, which is good because it's definitely one of the stronger currencies. the main challenge with Bitcoin right now is scalability, right? There's not a lot of people on the network, and you can still send Bitcoin in like about maybe like less than an hour, which is still way far better than a bank. But when the volume spikes on the transaction, right now the network can't keep up, right? So the general idea right now is that, okay, well, you can't transact with it very fast. It's still much faster than gold, still faster than banks. But there are some technical challenges still ahead, right? So it's still definitely still like in the early stages. So getting into like the technical part, like how do we know Bitcoin is going to go up, right? You know, why would it not just peak here and then continue to go down? So you guys familiar with Fibonacci?
Yes.
Right? So 1 plus
No.
2. So
Fibonacci
okay.
sequence.
yeah,
Okay.
so basically it works like this, right? Super easy. So if I take 1 and then I add 1 to it, I get 2, right? So if I add 1 and 2, I get 3. Right? If I add 2 and 3, I get 5. So you just always take the previous two numbers.
Right. Like
Right.
nature
Okay.
is built around this.
Yeah, so the general idea is like nature is built around it. And also, interesting enough, pretty much every trader whatsoever uses Fibonacci sequence for all their trades, and it lines everything. And the reason why it works is because everybody does it, which is kind of weird, but you know, it's just an agreement on, you know, creating some level of sanity rather than just total randomness. So the Fibonacci sequences represents itself, you know, in the price point fluctuations in the stock market.
Okay.
All right, I know it's
Mhm.
really, really boring. So if I keep going up the left, or let me actually go all the way.
Well,
Go
I
all the way.
mean, I understand what you're saying. I don't understand why it's relevant.
Yeah, so I'm bringing it up. That's gonna make itself clear soon. So we got 5, and then 8, and then what's after that? 13, and then 21, right? Then 34. And what, anything after 34? No, I don't care. Doesn't matter. All right. So if we look at, so there's basically a tool here which I can look at the multiples Fibonacci retracement. Right. So this is going to tell me the multiples difference between two different price points, right? Just like we were looking at gold earlier, and we were talking about the 1.618, right, and the 768, right? These are just the multiples of the distance between those 2 points. You guys following me, or am I losing you?
I mean, I kind of understand what you're saying, but I don't
You
understand what the
lost,
point is still.
you lost me. Can you just back up like 60 seconds?
So this is just a tool that shows me, well, where is my gold chart? Yeah, gold right here. So what I was saying is that these numbers here that you're seeing, they just show multiples of the previous
Right.
price. So if I multiply $1,916 by 0.749, I'm gonna get 1,675.
How do you know it's 0.749, or why is it 7.49?
Well, it's close, right? So the standard numbers used in trading are, oh my god, can't see because the stupid Zoom thing is there. Go away. Yeah, you guys can see that probably. So I'll reopen this one back up. So these are the standard numbers that are used, right? These are usually reversal points: 236, 0.5, 786, 618, and we also have an 886 and a 113. But I'm not going to use those right now. Those are like whatever, less often used. So what it means is that typically, for example, if the price goes up or down by 2.36, it could change its course at that point, and it most likely will, right? It usually wouldn't change its course like in between these numbers. All right, and I can maybe give an example of that right now. So these are these numbers here right now. So I have 1 here and a 0 here at the bottom, right? You can see like the points of reversal, 236, this one did go a little bit beyond it, but that's pretty abnormal. If you see most of the price point reversals here, 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 they're all like on these lines. And the reason why is because all the traders are using these as, you know, expected or potential points of reversal.
Okay.
Does that make sense? So that's,
Yeah.
so these numbers are roughly based upon the Fibonacci sequence.
Yeah, I don't know why the hell everyone does that, but yeah, I see what you're saying. So you know when things are about to happen, whether go up or down, you know something's going to happen.
Because like the chances of something reversing in the middle are much lower than it reversing here. And the reason why is that there's more people buying here than there are here.
Right.
Or there are more people selling here than here, because look, I mean, this one hit like exactly on that line. And you see that a lot. You see it a lot.
You can kind of predict like when the rising is going to stop when you hit a line.
Yeah, exactly. So right. So you know the other technique is that you kind of like use other points of reversal. So if you see this one point here, it went up exactly to the same point that this one reversed. So it basically says for this period of time, we do not want to buy Bitcoin for any more than $6,000. Right. That's the maximum we're willing to pay. Right. So there's a couple of high-level techniques, but by far use of these fib numbers is the best.
Can I? None of
Can't hear you, Tessa. You muted your mic.
none of you guys have my Amazon, right? Nobody just bought Contagion.
No.
My Amazon is hacked again.
Oh, awesome. Nope,
Maybe
we don't.
Maybe your Amazon has Chromosome virus.
I have my own.
It's literally the third time. And I keep changing my password to it's always unique, and it's more and more complicated than last time.
You probably have a virus on your
Sorry.
computer.
Yeah, you have a virus on your phone or computer.
Yeah, for sure.
I guess the first time it happened was like, I don't know, a few years ago, and then it happened a few months ago.
Well,
You
your information could also just be on the dark net.
I've changed but this password is unique.
Yeah, you have a virus.
How unique?
You have a virus.
It's the only place I have it. Like, I don't have this password for anywhere else.
Put MFA on your account.
Yeah, and also delete the virus.
Multi-factor, multi-factor authentication. It's like having a token on your phone.
For Amazon?
I'm pretty sure because I have MFA for my work Amazon.
Yeah.
Okay.
So it'll have to text you a code before you can log in. So even if they get your password, they still can't get in. They'd have to steal your phone too.
Okay.
Sidebar and sidebar. All right, are we good with that?
I don't remember what we're talking about now.
Yeah, exactly.
Sorry.
Oh my God.
Fibonacci, and then you said this is what most people do. There's some other high-level tactics people use, but we're not going to go into that. Yeah,
you're right. So two high-level ones are basically look at other points of reversal and also fib numbers, right? So when you combine like these numbers, 786, 618, 0.5, 382, 236, with the real Fibonacci sequence, which is, those other numbers that I was bringing up before, why is it something different? Okay, here. 1, 3, 5, 8, 13, 34. We can get longer term patterns, right? So if I look at, let's see what I did here. This was this one. Yeah, this was the very first one, it looks like. So this one, I'm not going to make it 1.618. I'm going to make it 34.618. So we have like it actually working backwards. So if I take the top of this cycle, right, whenever a market goes up and then has a drastic pullback, we call that a cycle, right? So this would be like this section here. This would be like one market cycle, right? And then when we're done going back down, basically we start a new cycle. So another cycle, begins here, right? This is probably not enough of a pullback to be considered a new cycle. So this is another cycle, and then we have another cycle here, right? So what we're trying to do is, figure out where the cycles stop and end. Right, so this is part of this one, sorry. Sorry, got that one wrong.
Why are the cycles so dramatically different sizes?
Yeah, sorry, these ones I got wrong. This is a cycle, and then this is a cycle.
Yeah, why are they so much different?
Well, so look at it a little bit differently. So if you look at this very first one, it actually looks smaller than way smaller than the second one. But this is because this was the invention of Bitcoin, right? Like right here. So there was no price that it could be bought for any earlier than that. If we did expand it out, we would see something that looks a lot more like this, right? All right, so you see how like the cycles are getting smaller, but we're also on a log scale, right? If I didn't use a log scale, I would see nothing, right? I couldn't chart Bitcoin whatsoever because it's growing so fast. All right, so the only way I can see anything whatsoever is if I use a log scale.
What is a log scale?
Basically, it converts, I don't know, can somebody explain log? I don't think I'll be able to.
I can Google it later, don't worry about it.
It just, like for things that grow exponentially, it basically just kind of flattens it a little bit so that you can actually see what's really happening. Right, because if you don't...
Scaling it down.
Yeah, because if you don't, right, all you have is a flat line and then it just expands like this. Right?
Okay, I got you. I know what it is.
Yeah, so it kind of like, it scales it down so that you can actually see it.
It's just widening the lines. You can see the differences visually. Yeah,
exactly. It's just a different way of seeing it visually. So you guys got the idea of market cycles?
Yes.
A new cycle begins when the prices stopped going down, right? So why does that matter? Well, because that's exactly when you want to get in, right? That's when you want to buy, right? So if I take
the beginning of a cycle?
Yeah.
Why?
No, I'm sorry. Well, the beginning of a cycle or the end of a cycle, whichever way you want to look at it, but it's the same time, right? You don't want to buy in the middle, right? That's the point.
Yeah, but why? I get what you're saying, but why?
Well, let's say I bought like here. Let's say I was in the middle of a cycle, right? So I'm kind of not finished with this one. I bought Bitcoin here at $7,000. Well, then guess what? The cycle hasn't finished, right? But then we go into the bear market, right, where it's correcting back down, and now I bought my Bitcoin at 7,000, and now it's only worth 3,000. That's why you don't want to buy in the middle, right? Same thing here. If I buy in the middle while it's going down, well, now I bought my Bitcoin at 8,000, but then it keeps going down here. Right? So I don't want to buy in the middle. I want to buy at the beginning or the end of a cycle. I don't want during the cycle.
There's too much neutral ground in the middle.
Yeah.
Basically, for it to move either way, and moving is when you make money.
Well, yeah, you want to sell the top, right, and buy the bottom, but actually,
but it kind of lines up, I guess. But the middle and the top aren't necessarily always at the beginning and end of a cycle.
No, exactly. So a cycle is only finished once it goes back down, right? So you don't want to sell.
What counts as the cycle.
Yeah, okay. You don't want to sell at the end of the cycle. That makes no sense whatsoever, right? You want to buy at the beginning of a cycle. Right, so when cycles start and end, that's for buying. When you want to sell is just before the cycle starts to correct. Right, the bull phase of the cycle. When the bull phase of the cycle is over, that's when you want to sell. Yeah. Right. Make sense to everyone so far? Okay, I'll take that as yes. So if
sorry, I have you muted.
It's okay. So if I draw this line here from the high point of this cycle, the high point of the cycle to the bottom of the correction, right? And this is basically now going to set the stage for my scale, right? So this distance, which is $2 to $32, is basically considered like one point. Let's just call it a point. So for every, let's see, what's 32 minus 2? It's $30. So for every $30, it's like 1 point. So if I multiply 32 times 34, that's where I get this number, 1,048. Does that make sense?
No. Well, I mean, yeah, I understand that those two get that, but why are you multiplying them?
I'm just trying to explain how this tool works.
Oh, okay.
So when you see 34.6, 34 of what? Well, it's 34 of the distance between 0 and 1.
Okay. 35. Okay. I got you.
The 34 is the number that you
Yeah.
that other screen that you pulled up. That was one of the numbers that you put in that change. That is like a trigger for it to change.
Yeah, so this is this one, 1 plus 2 plus 3 plus 5 plus 8 plus 13 plus 21, 34. Right? Is my math right? I only memorize the numbers up to 34, honestly. So if we draw the top of this bar, so if we make one segment here as the distance between these 2 points at the bottom of this cycle to the top of this cycle, and then we multiply that times 34, we get and then we add 618 for whatever reason. Again, I don't know why. We get the exact top here, right? So what it means is that if I would have bought Bitcoin, whatever, anywhere in here, let's say I even bought it like here at like $9, I should have been able to predict that it would go exactly to this point.
Only if it stays on an upward trend, though. How do you know it's going to? Like, it could reverse up, then reverse down, and then reverse up.
Right, but it's not doing that. So here's where it gets to be a little bit more creepy. Let me just draw another one of these things, fib retracement. Okay, so let's do the same thing again with the next cycle. So I'm going to take the top of this one. I'm going to change the color here too, so it's easy to see the difference. Let's make this one orange. I'm going to take the top of this cycle to the bottom of this cycle, and I'm not going to include these wicks because these are usually sell-off points. I'm only drawing it from the closing points, right? So this wicks are basically just these little things that are shooting up, and what they basically mean is that the price is not supported there, right? The price is really supported where the closing bars are. All right, so now instead of 34, I'm going to make it 21.
Why? Why are you picking 34 or 21? Or
because I'm going down. I'm going down. 34, 21. We're going in the Fibonacci sequence in reverse.
Why?
Yeah.
Why? Because it works. Look.
But I guess how would anyone know this?
Because it's trading exactly on this pattern.
But also, why is it in reverse?
Because on an asset that's increasing on a logarithmic scale, right?
This is just how that works.
It gets the curve that goes down, right?
But how do you know it's going down?
The curve becomes less and less steep. That's how log curves work.
So you're saying the Fibonacci sequence actually declines the loop, like?
No, I think in general the Fibonacci sequence goes up, but for stocks, I guess, is this kind of just like the path that it takes to stabilize, Josh?
or destabilize.
You would expect that, especially Bitcoin is still fairly new, that over time things would stabilize and the fluctuations would get smaller and smaller.
Yeah.
Okay.
Exactly. So it's going to grow. It's growing slower. That's what I'm saying. The rate of increase is going down, right? So between, these 2 points, this was a 55,000% increase, right? Between these 2 points, we have a 9,000% increase.
Jed, are you good? You look confused.
No, his mind is just being blown. That's all.
I'm trying to figure out why. Why? I can't make the decision myself until I know why.
Right now, we just need to know this is how it works. The why.
No, the why is important though, right?
The why is the whole reason.
Yeah, the why is the whole reason, exactly. So look, if you think of why, so Fibonacci represents itself in nature, and we know that traders use Fibonacci. We also know that Bitcoin is on a logarithmic scale. So why wouldn't whoever's supporting this, why wouldn't it increase as a log scale along the Fibonacci numbers?
But why would it follow a log scale specifically?
Because that's what happens to new assets that are growing fast. If you look at, for example, let me show you another one that's logarithmic, which is Berkshire Hathaway.
You're saying not everything is logarithmic.
No, that's correct.
That makes more sense. I can accept that Bitcoin specifically is.
Yeah. So I forget.
What about Amazon or Google?
Hang on.
I don't know.
I would probably say
Amazon would show it represented when it was first blowing up.
Yeah.
Right.
So yeah, I'd probably agree with that, and I would actually suggest that maybe Apple still is logarithmic, but that's kind of a different point. So here's Berkshire Hathaway, right? In 1980, shares were $253. Now shares are selling at 327,000, or they were selling at that much, so much less now. $280,248, right? So it's not the only assets that's gone from a couple $100s to a few $100,000. And you can see this is logarithmic, right? It's going to keep increasing in price, but the rate of increase is going to decrease as the price increases.
Okay, that makes sense.
Stand that.
Okay, all right.
That makes sense. That makes sense. That last sentence.
Yeah, so Bitcoin is following a logarithmic increase, right? Right now it only looks like these crazy ass numbers, right? They only look like super severe, but here I'm looking at the monthly chart, right? If I was to zoom all the way in, I mean, look at this. It would be like the most craziest stock to trade ever. $90,000 down to $50,000. Seriously? 50% drop? What the hell? What a piece of trash, right?
You can predict what it's going to come back up to.
Yeah, I mean, look,
Fibonacci sequence.
Yeah, Bitcoin is not the most volatile asset to ever exist. It's just brand new, and people look at it and they're like, they don't understand it. It's not a stock. They're like, it's based upon nothing. Nobody uses it, and then they're like, well, it's trash, right? But we're only in how many? Look how many cycles have occurred here, in the Berkshire Hathaway, probably 1, 2, 3, 4, 5, 6, 7, 8, probably 9 here now. So there's already been 9 cycles over the course of 40 years with Berkshire Hathaway, and that's the reason why it's been able to go from $200 to 280,000, because it's had so much time, and it's logarithmic, right? So the takeaway here is that stocks that are growing on a logarithmic scale are literally the most valuable stocks that you can buy.
Is that just because it's predictable? That adds the value? Or just because it's logarithmic,
because
it's on its way up?
It's always on its way up, exactly. Okay. It means it's not for you always see the classic let me try to draw in here. Bitcoin is a bubble kind of thing, some bullshit like this. Well, actually, this is the section of the chart that you can't see because you're not using log. Look at this. It's a bubble. It's coming straight down, right? It's going to be worth $5,000. No, that's not going to happen. It's literally never going to happen.
Okay.
If you don't look at things on a log scale, then yeah, of course it's going to look like this because you can't see this first section of it, right?
Okay.
So Bitcoin it's not a bubble. It's just growing logarithmically, like lots of other very valuable assets like Berkshire Hathaway have. Right. All right, you guys still following me? Can we get back to the Fibonacci's?
Yep.
Okay, cool. So we saw this. So now that this has actually happened twice, right? We saw it hit 34, and we saw it hit 31. Now we can actually know what the next price is, right? What is it going to be? It's going to be 13, right? So if we draw the high point here, or 1, and then 0, it's going to be like right here. And I'll get into a little about how I know this is the bottom, but let me just finish this part first. So now I take this from 21. Now
Tessa, can you please mute because that reverb is really bad. I'm sorry.
All right, so the rate of increase is decreasing, right? So here we got like about an 80x, or I guess 100x. On the next one, it's going to be like 50x, right? So the rate of increasing, it looks to be like halving each time. Well, the potential rate, it depends on where it's bought
it basically is.
Well, it depends on, if you draw the line so if you bought the exact bottom and sold the exact top, you would make 100x. If you buy the exact bottom here and then you sold the exact top here, you would make only 50x, right? So the next cycle will probably be 25, 12 and a half and so on, right? So the next high top cycle that we're looking at here is, $226,000.
It'll almost be a new high.
No, that will be the new high. That's what I'm saying.
Right. So
no, I mean, but hasn't Bitcoin gone above 22,000 before?
No,
went up to like 23 or 24.
No, 222,000.
Over what time period? I don't.
Yeah.
How's it going to go from 19,000 to 220,000?
Bro, look at this chart. Bro, look at this chart.
Yeah, but over how long?
4.5 years for the next cycle. And I can get into like the time periods, but yeah, it's going to be about 4.5 years.
It's a long time. You have to like sit on it.
Who cares? Even if you put like $1,000,
it's a long time
leave
for
it alone.
Us we're younger, but it's not as long of a time if you kind of anticipate what's going on.
Oh my God, let me pull up the stock market, guys. You want to know how long it takes to make 50x in the stock market?
Like a long time.
On average, the stock market has grown 10% a year over the life of the stock market.
Yeah, exactly. You're not going to get anything near that on any stock in all of existence. Even if you bought Tesla, right, at whatever $45, it wouldn't be. It's not anything near 45x right now. Even if you sold the top at 900 or whatever.
Yeah.
I guess.
How is 4 years a long time? Like, I don't understand that.
It's a long time in our life with the amount of excess money that we have. To put any kind of money anywhere for that period of time, it's a long time for us. But I guess to be the devil's advocate, how often does something like this that is following a logarithmic pattern end up falling off the logarithmic pattern?
I don't know. Yeah, I don't know how to answer that question.
There's no way that this always works every single time, right? There's got to be some instances where something happens and it falls off this pattern.
I'm sure you're probably right. I just don't know of any cases.
I guess what would be, is there a different pattern or something of where like you would more often see something fall off? Like what pattern is Tesla following, right? Because a lot of people think that Tesla is just going to fall off at some point.
Yeah, Tesla is totally a
Tesla's
bubble.
going to correct.
Yeah.
Tesla's correct, but some people actually think that they're just doing too much crazy shit. It's not going to actually all pan out. At some point, they're just going to go under. They're borrowing too much money from the government.
No, that's just big market. What's happening right now with Tesla is that they see it has a lot of potential, and so they're playing games. And so what they'll do is, here, let me pull up the Tesla chart.
Tesla's going to be massive in like 50 years.
Yeah, they're doing the same thing with Boeing, by the way. So, and anytime you have like
they're building commercial space flight. That's the only frontier left.
What pattern are they following?
None. Right? There's no indication of any pattern.
Elon's not a traditional CEO either. He does lots of crazy shit.
Which is why people think that they're just going to end up going under.
Yeah, I mean, right now.
Well, his board threw him out. It's not like he's, king of his castle. Like, dude, maybe a little, but like when he started getting too crazy, his board threw him out, which is the board's job.
Yeah, so right now Tesla is just following a linear pattern. That's it, right? And so let me use a different quote tool. It's called a pitchfork, which basically just allows me to like identify a range. Tesla is just running a linear up, right? There's nothing like unusual about it. It's not logarithmic. It's just going up, right? And it's trading with inside of this range. All right, so what whales tend to do with assets like this is they see something increase in value like this, and then that's basically their cue. So they know that there's
a whale.
Sorry, a whale is somebody that has a lot of money. A market maker, somebody that can affect the price of an asset because they have enough money to do so. So we have this, it's just trader speak for like people that have a lot of money, whatever. So we have the saying, don't play with the whales, which basically means, look, if you're here, long-term Tesla, don't try to like intertrade this stuff. Just let them just let the whales have their fun. They're going to, make it go all crazy. They're going to bring it up, bring it down. They're going to crash it. They're going to bring it back up, crash it again. Everyone's going to be super emotional, but they're basically staying within this range the whole time. So like, don't worry about any of this nonsense. Don't play with the whales. But
that's how you lose all your money.
Yeah, exactly.
You don't know what some guy's going to do. There's no reason or anything else. He's just like, well, today I'm deciding.
Yeah, exactly. So Tesla is growing linearly. There's no indication that there's any logarithmic pattern to this whatsoever.
Assholes.
Does that answer your question? So Tesla, look, it went up here $900. And everyone thinks, oh yeah, it's just going to keep going to 10K. It's like, yeah, right, the freaking open short so hard on this, and just crash it down here all the way to maybe like $75. Buy it all up.
They make more money more quickly like that.
Yeah, crash it down here to $75. Buy it all the way up. Let it come back up here to $1,000. Maybe crash it again. Keep going up. And here in like whatever 10 years, it'll be worth $5,000.
Financial bullies.
So I wouldn't chart Tesla as logarithmic in any way because it's not. It's just linear.
I know that it obviously didn't take, but like Google, Apple, they followed a similar pattern. Amazon, I feel like I would expect those to do something like that.
Hang on, let me pull up. I don't know because I don't really look at these stocks too much. Nope, that's linear. Linear. Yeah, I think I remember seeing the Apple chart being logarithmic. This section of where's my stupid drawing things? This section of Apple is logarithmic, which is super valuable, and that's one of the reasons why Berkshire Hathaway owns a lot of it, because any stock that's growing in a logarithmic scale is like the most valuable stock that you can buy.
Well, it's your safe bet.
Yeah. That's why the logarithmic scales are the most valued ones.
The reason why people don't buy these logarithmic stocks are because they don't know. I mean, I feel like if
that's exactly it. They don't like. Did you guys know any of this shit before I just told you?
No, but it's right.
Like, why would they know? Why would normal people know that?
But if it's this why would this information not be so disseminated that it saturates the market? And
because the rich don't want you to know this stuff.
Out the window.
The rich people don't want you to know this stuff. They're not going to teach this in public schools or broadcast it on the front page of Google.
But people do. People broadcast this kind of shit all the time.
I don't see this in the daily news.
I started listening to the what is it called? The Intelligent Investor. And they had multiple instances where people thought that they had these like surefire ways to make money, and they publish it, and then all of a sudden it's like obviously not a legitimate pattern, right? Like you would say that, yeah, people would never tell you this, but that's not really true. People think that they're so smart and that this is such a sure thing that if they tell everyone, then they're just helping their investor, right? So like, why would somebody that manages somebody's portfolios, why would they not tell their clients this kind of thing, right? Like, hey, buy Apple, it's in a logarithmic pattern. It's a sure thing.
I think a lot of them do, Tessa, but nobody.
Then why is this information not well known? Like like if Apple is a logarithmic pattern, if Bitcoin is a logarithmic pattern,
well, I don't know what they call it for like whatever. But you always have a diversified portfolio, right? So they're going to play some low risk stuff, so they always have money. Some medium risk. I would probably say logarithmic to medium risk. Only haven't just learned about it. And then they're going to have super high risk.
Yeah, to be honest, like if I could buy one share of Berkshire Hathaway, I would, but I can't, right? So there is like Berkshire Mini, I think, which is a derivative product, but that would definitely be a good investment. Look, this pattern has played out for 40 years. There's literally no reason for me to think that this pattern is ever going to stop. Right? So far, this pattern.
But how much is one share?
Of Berkshire Hathaway, $280,000.
Oh, Jesus. Okay, that's why you said you wish it.
Yeah, I can't even buy one share. That's what I'm saying.
Right.
So,
okay. So people that own all these shares, they probably own a lot of them.
Yeah, super millionaires like that have hundreds of millions of dollars portfolios, own 7,000 shares of Berkshire Hathaway.
Right.
They've priced out the poor people. That's why everyone doesn't have it.
Well, there's derivative products, like I said, so it doesn't matter.
Yeah, well, whatever. They sell us the light version that's made in China.
It's a derivative. It's not made in China.
It's
like you own one. It's like you can own.
Saying.
Yeah, you can own 1/1000th of a Berkshire Hathaway share, essentially.
You get a group with 100 people, so you can buy one fucking share. Jesus.
Yeah.
Yeah, but the point is like, look, over a long period of time, logarithmic increases or logarithmic patterns, right, are the most valuable, right? You can go from $300 to $280,000 in 40 years. If
you held on to it for 40 years.
40 years.
That's Yeah.
So if you look at the pattern that Bitcoin is at right now, we're in like which year that we're in right now? 2009, 2020. So that's like 11 years. Look at Berkshire Hathaway. In its 11th year, so that takes us to like 80. What was this first year? 81. I guess it would be like 91. Where the fuck is 91? 91, 92. Yeah, so it was like right here. So it's been logarithmic the whole time. It's been logarithmic for 10 years. If I was old enough to buy stocks in 91, I would buy Berkshire Hathaway at $6,000.
What happens when it gets to 1 in the pattern?
What do you mean when it gets to? Oh, then it basically
There's no growth left.
Yeah, there's no growth left. But the growth
But does it reset and correct and start again?
That's a good question. My expectation is that it just basically stays the same value unless some type of event occurs.
Like what? Like a recession or some other?
Like alien invasion.
Coronavirus 2.0.
I guess you're saying that Bitcoin following starting at 34. Did Berkshire start at 34? Or did it start at a higher multiple so it'll take more time to get down to 1?
I'm not saying that the Berkshire Hathaway is following the Fibonacci.
Permanently, it doesn't just increase forever. It's not like it's at 50 or something.
Look,
34.
There's
21,
different
55.
there's different levels of logarithmic curves. So let me draw my curve here. I can have a log curve that goes like this. Sorry, not like, like this, or I can have a log curve that goes, like this, with maybe a little bit more steeper in the beginning, right? These would both be log curves, right? Or I could have a log curve that goes like this. This is also a log curve. I mean, it's still going up, right? Maybe it just keeps going up. Maybe this is what Berkshire Hathaway does. It's still a log curve.
But I guess my point is at some point either it levels out or there's some event that either resets or changes the curve, right? Because it could also be that at some point, some event that it just starts doing a normal flat line.
Berkshire Hathaway looks like it's going to level out in, maybe 300 years. That's where it looks like it's going to level out right now. Let me see where I can draw this. So it's still going up even into 2058. All right, let's see if I can stretch it out further. Like at one, this log curve is definitely going to level out somewhere, but not anytime soon. Okay.
Okay, but I guess my point
is. So mathematically, you're right. The log curves eventually do level out, but
the amount of time won't even be in your lifetime.
It won't. Yeah, not for Berkshire, anyways. Berkshire will never stop going up unless there's an alien invasion. So going back to the original question, is there cases where things go from a log scale to not? Probably, but I just don't know about them. I couldn't find any examples, at least the companies that I know of.
I guess what are the other main log curves that you follow or that you've identified or that anyone's identified that you've looked at?
Berkshire Hathaway, Apple, and Bitcoin are the only ones I know of. I mean, you can do your own research and find out some other ones.
I guess you're just not curious to find your own, or there's really just 3 right now?
There's not a lot.
I guess I understand that Berkshire is a sure thing. I would agree that Apple is a sure thing. But if there's only 3 right now, how do you know that Bitcoin's also a sure thing? And I'm just playing devil's advocate.
No, it's good to be conservative when you're investing money. It's not bad whatsoever.
It's not about, honestly, this is just how I learn. I have to ask the negative question. It's the only way in my
I guess, yeah. I would say this, the number of assets that are growing logarithmically are very small. And I only know of 3. And I've looked at a lot of charts. Right, we looked at gold. If you want to pull up silver, right, we can pull up the silver chart. Let's pull up silver. Right, no log scale here whatsoever. This is pure pump and dump, 100%. Right, so it's not logarithmic. Right, it's nothing logarithmic about this.
I feel like some of these are definitely going to be run off what's going on with the news or the market, or a Tesla releases a great new invention, the stock's going to go up, of course, right? And the same thing opposite.
But Tesla is not logarithmic, right? Tesla is just linear, which is good.
I just mean Tesla's asking okay, how or when and why would it change? If it did, why would it happen?
Well, it's not just that. I mean, I know
if I saw Tesla go up to like $1,800 and then maybe to like 2,300, that's starting to paint a logarithmic curve, right? But right now it's not, right? So right now it's just linear. And, time will tell. But if Tesla goes up here to like $4,500, now I'm starting to see like logarithmic curve, and now I'm starting to think, okay,
just
5 years in,
around long enough.
It's not around long enough. Yeah, we don't
Right,
know.
yeah, you can't tell what
It's not around long enough. Yeah, that's the point, right? But Apple is around long enough. Apple is showing logarithmic growth over that period of time. All right, so gold and silver are like the worst assets I can think of to own right now. Literally, I'd rather have dollars. Like, they're just crashing. They're going to nothing. Let's pull up Boeing. BOE. I don't know what the heck. Yeah, Boeing. I think this is like some kind of index. Yeah, this is not a stock I would want to own.
I think it'd be a good time to buy Boeing because it's
tanking.
No.
It's only because they've had those problems. They've had a couple of problems.
Well, maybe not Boeing. I just mean like maybe Carnival Cruise Line.
What about like
BA. Yeah, but you're basing it what? Because the price is low? That makes no sense, guys. That's what retail investors do.
But I'm saying Boeing right now is having like the tank is an identifiable.
Oh, here's a long one. Actually, this is logarithmic. I actually didn't really look at the price before. So actually, if you look at this actually is a logarithmic curve. So Boeing actually could be a good stock to buy, but not at this price. I would be looking for something like maybe $85 or something like that.
Why?
Just points of support in the overall market sentiment, right? So if you look at supporting lines, these are going to be lines where the price points out. So basically, this is what's called resistance, meaning like the price doesn't want to go above that. Then you have a lot more resistance here. So once basically you break above resistance, so now this was kind of like a false breakout, what they call is because it broke above resistance and then it goes back below. But here we spent a lot of time under resistance and then we went back above it. So I would buy Boeing at probably $75 because the chances of it going below that resistance is super low. So now the support becomes...
Hasn't been that low in a long time.
Yeah, so basically the idea is support becomes resistance. So so we're getting close, but I wouldn't buy Boeing yet. I would buy it at $75.
What about like GE?
Let's pull up GE. General Electric. Yeah. See, so what happened here? So look what happened here. This section here is the problem. So we had a nice good log curve, and then, damn it.
Yeah.
We had a nice good log curve going here, and then basically it just went exponential, and it just totally screwed it up, right? So now it's going to have a huge correction, which you're seeing, and in order for it to continue on this log scale. So if I went to maybe like, I don't know, 3 months or 3 month scale or something like that, maybe over the next 100 years, it'll get back into a log scale. But right now, it's just getting totally wrecked, and it's because it was
overvalued.
It was overvalued, and a lot of people bought it at an overvalued price, and now it has to come way back down below
to represent a price the market can bear.
So the chart looks like shit right now. I mean, I wouldn't buy General Electric. I'd probably definitely be looking at getting some Boeing at $75 though. That would probably be a good buy.
Yeah, these are like huge companies. What about smaller companies like Royal right now?
Royal?
I feel like smaller ones are going to be more volatile.
Yeah, let's look at that. I don't know. This just looks like linear to me. Again, it's not a big deal. Okay, it looks like really terrible. But again, these are just whale games in my opinion. Wouldn't buy here. Probably look at buying like $8.
What is this thing you're using?
Trident.
This is called a pitchfork. It basically just.
No, sorry, I mean the tradingview.com.
Oh yeah, tradingview.com, right?
Is this something you have like a subscription to?
Yeah.
Is it expensive?
You can use it for free. You can get a free account. You can use the charts for.
What you're doing right now is not a free account.
What I'm doing right now is in the free account. Yeah.
Oh.
The only reason why I pay for it is because like I can have different chart layouts. I can have like, you know, multiple indicators. Like there's limits that they place on you, and I don't want any of those.
Probably not that expensive either.
No. Right, and when the market's moving, you know, for example, like they have this 8x view. I want to be able to see every single asset, what its price is, all at the same time. So you can't get this view on the free version.
Is Disney logarithmic? Or
Tessa wants to know like Tessa wants to know like every every stock if it's logarithmic. Yeah.
Well, we're all considering buying stuff, so yeah.
Well, I mean, if I'm basing it off of things being logarithmic, I want to understand.
Yeah, Disney is.
Okay.
All right. I'll look at getting Disney maybe around $50 though. Maybe like 45. 50 is probably still fine.
If it goes back down that low.
That will, trust me.
I have no idea what they're at right now. What are they?
They're 93. So they were 150. They're already at 90. They're going to 50 guaranteed. Disney shut down. They're dead. But still, because
but Disney is Marvel now. They're not just their parts.
Like,
it's not going to go to zero. That's not what I'm saying. I'm saying this is a good buy, right?
Right. But I'm just saying, like, I mean, Disney's been getting a lot of shit because Disney Plus did not roll out well. And
those are all whale games. Forget all of that shit. Just look at the chart.
But I'm just saying, like, I think in general, Disney is, like, people aren't thinking Disney's going to go under, right?
No, they're not. And the reason why you can tell that is based upon the price action that the chart is following, right? All that news about this company did this and that, they're all irrelevant. Doesn't matter whatsoever, right? I could literally watch no news whatsoever in trade stocks. So like here, Royal. What was it? Royal.
What news would tell you, though, is
I could draw this chart without having any coronavirus and know that I need to short right here.
Okay. I guess it's just almost like background noise then.
Well,
right?
Background noise.
If you hear the noise, if you hear the news and you know that it's going to go up, fine. But at that point, you would have already bought or sold whatever you're going to buy or sell. And on
the only thing the news is going to affect is the very short-term price action, right? So maybe like, okay, on this day they said, hey, actually everything's fine. Royal Caribbean is going to be great. Okay, so now it goes from 107 to 125, right? That's the only thing that news is going to affect. It's all this little up and down crazy shit. That's what the news does. But I'm not trading that stuff. I'm not trading the noise.
Why don't you do this for a living?
I haven't succeeded enough.
It seems like you would be fairly successful.
Well, I'm getting better, but look at these time periods, Tessa. 2006, 2024. That's a lot of time.
I guess you buy on the long term, and a lot of investors want to see short-term gains, and that's just not how you operate.
Well, no, that's not what I'm saying, but I'm talking to a group of investors. I'm not talking to day traders, right? I can use all the exact same patterns right here on the 15-minute scale, right? So if I look at this right now, we're logarithmic down, right?
But I'm not asking why you're not a day trader. I'm saying, why aren't you moving? Like, why are you not managing people's money?
I don't want to do that.
Well, that's what I'm asking. Why not?
Well, whatever. I can just give you guys advice, and then if I become super rich, then maybe I'll do that, but probably not.
But it just seems. Obviously, you spend a lot of time on this. I would think that this is something that you would be okay with spending your time on.
Yeah, but I don't have enough assets to I don't have enough total net worth to do this full time. That's basically the answer. If I was the son of a millionaire, then yeah, I would do this.
But I'm saying if you were managing somebody else's money. Anyways, sidebar. And
Yeah,
sidebar.
no, I'm not going to do that until I become super rich. It doesn't make any sense. I have to prove my success first. It's not even a consideration.
There's plenty of people my age that freaking got some dumb-ass finance degree that doesn't mean anything that are managing people's money doing the same thing that you're doing. And
yeah, but I'm not going to do that. That to me, that's not right. They shouldn't be doing that. Anyways, so yeah, I mean, this one, Royal Caribbean, I mean, obviously it's going up. Like, I guess people are, either cruising more or this is just inflation. But yeah, Royal Caribbean, definitely not a buy to like $8. So maybe good buys would be like I think we said Apple, GE. No, wait, not was GE? No, GE, no,
GE.
not GE. GE chart is messed up. Not gold.
Boeing, no, we said Boeing.
Yeah, Boeing's probably a good buy, like around 75, I think.
We said Disney.
Yeah, Disney's going to be a good buy pretty soon.
Yeah. Oh, we have a special interest. Lockheed.
I want to know Lockheed.
Yeah.
Okay, let's see how Lockheed's doing.
It's like LMT. There you go.
Yeah. Oh my God, this is going to crash. Oh, this looks like GE chart. This is bad.
But why? It
looks like it's getting overvalued.
Yeah, it's being overvalued.
No, I know, but I'm
spiking too fast.
Was it logarithmic and now it's not logarithmic?
It basically, I mean, let me see. This is the main problem, right? This section down here. So let's try to just even that out. Yeah, no, the problem is this section here. It's just, this is the classic exit hump, right? This is going to be looking like GE chart soon. It's going to have like a 10-year correction. I would short Lockheed. Yeah, I would short it. Short it to like 160.
All right.
Sorry.
Dan's dad works for Lockheed, so
Dan's dad will be fine. Lockheed Martin's going out of business. It's backed by the federal government.
But he's retiring and he has retirement money in Lockheed.
Oh, then tell him to sell all that shit right away. Just tell it as soon as he retires.
Yeah, he's retiring this year, so.
Well, then he's gonna sell the top because he's fucking lucky. Yeah, I mean, look, you saw what happened with the app. You saw what happened with the Apple stock, where it like wasn't logarithmic and then it became logarithmic. That's definitely a possibility here too. But yeah, I mean, I would say.
I mean, it was already logarithmic. It's just whether or not it like reset, basically. Right?
No, this dip here. Look at these dips, right? It's just too dramatic. Right? This is not good. This is bad. These sections.
I feel like, I guess I don't know how much something like this matters, but I feel like
because basically, if you try to draw a line, think of it like this: if you try to draw a line, right, on this chart, we don't really go very far away. If on let me pull up another one. So this is Boeing. Let's pull up the Berkshire Hathaway. EK, what was it? I never remember. Oh, here, birthday. So if you see like the logarithmic curve, we never really go far away from the line.
Right.
See this section here. This was bad, right, for Berkshire, right? It was way overvalued, and then you saw like a multi-year. What was it, from 98 to, I guess, 99? Yeah, so at least a 1.5 2-year correction to go back to this line. So this section right here is kind of looking like what Lockheed Martin is looking like right now. So it's basically got to come back onto its logarithmic scale or go below it, right? So that means it's going to come down here to probably at least 200. So whatever. If you're planning on holding it till, for the next 10 years, maybe you just want to hold it and not sell it. But I wouldn't hold it. I'm not going to hold anything that's about to decrease by 50%.
Okay. What you're saying makes sense. All of the inputs are absorbing.
Yeah. And again, like these sections here, these are really bad. Right. This basically shows that this is showing that basically when the price gets overvalued, it just dies, right? I mean, we could see, more than likely we were looking at Lockheed Market and looking at something like this.
Right.
This is not something I want to buy right now.
I know you said that.
I would buy it in 4 years maybe when we start a war.
Well, and that's what I was going to say. I feel like Lockheed or anything defense related, right? I feel like they're going to have pretty significant swings every 4 to 8 years as you get switched between a Democratic president who cuts defense budgeting and you have a Republican president that expands it. So I feel like you probably don't even get into the defense world, but I feel like for industries, do you pay attention to that at all?
No. Again, all that shit is irrelevant. Doesn't matter whatsoever. Republican, Democrat doesn't make a difference.
I guess if you look at it though, like the decline here in 2008, this is when Obama was president, right? And then the decline here in 2000, who would that have been? Clinton? Right? Because from 2000, I think 2000 is when 2000 is when Bush came into office, and so it started steadily increasing, right? And then Obama came in office and it decreased again.
So who was in there before Bush? Clinton?
Clinton.
Oh.
It's when you saw a decrease. So I think some, and it's almost like
So maybe the cycles are based upon, maybe for defense stuff, the cycles are correlated to the
I don't know.
presidency. Yeah, I mean, that's a good theory. I mean, it's not a bad one. But right now we have a Republican president, and the price is not increasing.
Yeah.
I mean, if anything, this just makes me think that we're gonna have a Democratic president soon.
Could be.
Yeah, but anyways, I think this Lockheed could keep its logarithmic scale. It's pretty good, but the main problem is these swings are too large. It's not healthy for logarithmic scales to have these, because they could easily just break out of the logarithmic scale and just like go down.
Okay. Thanks.
All right, so lots of chart pattern kind of questions. Right, so we're going back to the Bitcoin chart now. Yeah?
Yeah.
All right, so I think overall the general idea is like, until like the asset breaks out of the logarithmic scale, there's no reason to think that it will, right? And almost always when it does break out of the log scale, it breaks upwards first, right? We're not seeing that with Bitcoin. Like if Bitcoin would have just to go here, like from 19K up to like 50K, that would just kill Bitcoin forever, right? It would just be dead. It would take like literally 20 years to correct.
But how would we know?
How would you know what? If it goes outside the log scale, outside of a log curve?
Yeah.
You can see it. Right? The
this
numbers
goes back to my previous question of a log scale that broke out.
Yeah, I guess it does answer.
But I guess like GE was the one that went, you said exponential, which you said if it breaks
bad,
out,
yeah.
go up. So you can very clearly see it's just like way off the chart.
Yeah.
So I guess, but like go back.
General Electric. Yeah, let's look at this one. Yeah, I mean it was doing fine up until like here, $12, I guess. And then it got stupid.
go back to Bitcoin. So like here, I feel like I probably would have expected that around, well, no, I guess that's just your normal.
Yeah, this is normal price range for log scale, right? This is perfect, right? This is literally,
Because of your, I want to call it the Da Vinci Code, but
yeah, you can call it that. But if you just look at it based upon the other principles that you looked at it outside of these, Bitcoin just happens to be following cycles along the Fibonacci sequence. We saw earlier that Lockheed Martin's cycles were based more on the maybe presidential elections, right? Which is fine. But the logarithmic cycles of the cycles of a asset are going to be based upon different things, right? And right now we see that Bitcoin is based upon Fibonacci sequence.
okay. So I guess if we saw it go exponential, that would be an indicator that it's no longer logarithmic. And
yeah, it's just going to crash down. Like if we really did see Bitcoin go to like, whatever 200,000 back in 2017, that would just be the end of Bitcoin. Like it would just be correcting and going down forever and ever.
Okay.
All right, so right now the log scale is like super tight. It's really nice. It's literally like the most perfect log scale I've ever seen, other than Berkshire. Berkshire is even better than Bitcoin, but this one is still looking really good right now. All right, so you guys got the principle there? All right, so now you know where I'm getting. So now you know why I'm saying Bitcoin is a good asset. Why? Because it's following a log scale.
Understood.
All right, now you see why I'm also projecting the next top will be 200,000.
Yep.
All right, so how do I get the time? Well, actually, before we go to the time scales, let's go. How do we know that like this is the bottom, right? That's probably a better question. Let me take this one off. All right. So now we're going to break out these intermediary ones. So here I'm going to use something called the 886, or the inverse of that would be 0.113. Oh no, I don't need one. Let's make this purple. No, that's not what I wanted. I don't know the line. This one. There we go. Okay. Oh, this is one. That's what I didn't see this one. All right. So if I draw 0 from the previous high, and I draw 1 to the next high, then I see that the 1.113 is literally the exact bottom. It does not go below that whatsoever. It literally hits that price point exactly. Right. So that means I could have known like exactly to buy at this price point. Whatever. Maybe I had an order sitting in just above 0.113, and I bought Bitcoin at 173 before it starts going up again. So I bought Bitcoin at 173, and I already know, or I could have estimated that it's going to go from 34 to 21 because I knew that it went 34. That gives me the number 34 is definitely a clue that it's on the Fibonacci, because 34 is a really unique number, to be honest. I could have known that it was going to go from exactly where I bought it at 170 to $19,000 or $18,000. It's very easy for me to have made that conclusion and been right, and that's exactly what happened. All right, so let's go to the next one. Let's draw another one. Let's make this one pink. Why not? So we go from the previous high was at 0. to the next high here at 1. What do I get? Exactly 113 is literally the exact bottom that this point hit before going back up. All right, so if I was paying attention more, I would have just, yeah, I know, it's blowing your mind, right?
Like how?
I'm telling you, this is traders use this shit. That's why it works. So if I was paying attention more, I would just bought Bitcoin at 3,000 or whatever this number is, 3,100, and then whatever, just held on to it. But I only just found this pattern like 2 weeks ago, or like, yeah, like last week. Okay, so now I didn't buy at that point, but like we're really close now. So like, how do I know that, you know, right now, literally at this moment, 5,300 is like a good price to buy? Or what's it trading at? 53.86 now, whatever it is. Well, if we look at this, this is a 200 MA moving average, right? So for the weekly, so the 200 moving average on the weekly is something that is used often in trading, but we can also look at the moving averages just like I did with the Dow Jones. Remember, I used the 7-week 200 MA to see that it hit the exact bottom for 2009. Right? So you can kind of use moving averages to see, okay, which moving average is like supporting the price. And right now we're seeing that the 200 weekly is supporting the price, right? It supported the price here, 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 and now we're seeing it support here, right? So there's literally no reason for me to believe whatsoever that it's not going to support here. It supported it 1, 2, 3, 4, 5, 6 times before, right? And we know that it hit this.
I don't understand the red line or how you're getting it.
This is a moving average.
Yeah.
So it's like at this point of time, over the past 200 weeks, what was the price, right? So it combines all of these prices, and it says this is the, you know, and all these prices, and it says, you know, the average of, let's see. So if I took a 200 weeks from this point of time back, the average would be right
average
here.
Price for that week.
For this segment. Right. So if I move
it's like a running average.
Yeah.
But it's I guess with it. So it's always the average for the last 200 weeks. And then next week it'll be, you know, you drop off a week, you pick up a new week.
Right. Yeah, exactly. So it'll be the average of the last 200 weeks.
Okay.
So I guess how did you figure out that it was the 200 week average?
Well, whatever. Everybody uses this. It's not something new, right? It's like everybody expects the 200 week moving average to support. When it doesn't, like, it's pretty much death, right? Which is why they pushed it below this price. So now, like, we're sitting here right at the 200 week moving average, right? One of the things that they say is like, oh, well, if you close below the 200 week moving average, then, you know, like, that's really bad. But we had that here. We had that here, 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 right? This is just an opportunity for, you know, the whales to like load their pockets full of Bitcoins. That's exactly what they're doing. So they push the price way below the 200 week moving average. They get a weekly closing bar. Everybody panics. They sell off. They buy all their coins. They do it again. Sell off. Buy all their coins. They're getting like super cheap shit just right before it goes up to like fucking skyrockets, right? This is literally where we're at right now. They pushed it below the price, and now they're trying to just consume tons of coins at the lowest possible price that they can. They're just doing the same thing again.
So that's why you keep saying don't play with the whales.
Yeah, don't play with the whales. Just buy the Bitcoin, right? Okay. So what if it goes down to 4,200? It doesn't matter.
Just hold on to it. Yeah.
Yeah, just buy it. Like, if it goes down to 4,200, buy more. Like.
All right.
Okay.
All right. So
I finally understand what you're saying with that.
All right. So we've seen already, you know, 3 cases where the .113 supports the, you know, is the lowest price target for this one, right? So I can basically just follow this pattern and know the exact tops and bottoms for like the next 20 years.
It's just for logarithmic, or is it
This
gonna be?
is
Well,
only
it's
no.
just
This
for
only
log-
is working for Bitcoin. This is only working for Bitcoin.
And it's logarithmic, but on the Da Vinci Code.
Yeah, on the Da Vinci scale, right? Yeah, exactly. All right, let's look at it. Let's look at something else, right? So we see like the price increases are decreasing, right? So the rate of increase is getting lower, right? Let's look at the sell-offs, right, or the declines. So our first sell-off was minus 93%, right? Next sell-off takes us to 85%. Next sell-off takes us to 83%, right? So we're seeing that the sell-offs are getting smaller and smaller. The following sell-off, I was predicting like at around 80%. Right, so the asset is gaining stability. Right, and the reason why that's happening, the reason why the asset was so volatile in the beginning is because there's such low liquidity. Right, if you look at the total market cap of Bitcoin right here, it was like, you know, $500,000 or something like that for all the Bitcoin in existence. Now it's at like 70 billion or something, right? So as the asset price increases, the volatility is decreasing, right? So this whole argument that, you know, Bitcoin is too volatile to be used as a currency, well, it's decreasing in volatility over time.
Makes sense.
Someone's dumping all that gold for some reason. That's all I'm saying.
Data is the new gold.
All right, here's another crazy ass thing I want to show you. Digital currency white paper.
Where is that picture from?
From, where was it, MIT or something? It was like 2001, 1985. White. Cryptographic. I can't find it. Oh, if I do, anyways, there's a white paper published that basically describes exactly what Bitcoin is right now. That was published back in like early 2000s, which actually lines up at the exact same time that the gold started pumping.
What is white paper?
A white paper is like a description of a hypothesis. I don't know, I'll let you Google it if you want, but I'll try to find it. Unfortunately. So anyways, they kind of described like how you could create a currency that's based upon cryptography, which is exactly, and then they kind of describe, you know, how it would be transferred, how it could be digitally verified, how it could be distributed, how it could be non-centralized. It basically describes all these things. So most people agree that Bitcoin was based upon this white paper that was published back in like, you know, 90s sometime. You can also look at like around the same time, gold starts to pump, right? So my conspiracy theorist hat, you know, my tinfoil hat tells me that, you know, whoever is planning this, you know, Bitcoin increase is doing it because they're switching from gold to Bitcoin. They're getting rid of gold. They want to get rid of gold. They want to be in the next, you know, the 21st century's version of store of value, right? They knew that technology is coming out like this. So they pumped the price of, you know, gold way back when in order to start selling it and buying and start increasing the price of Bitcoin.
Which would maybe, I mean, wouldn't that correspond with, if a bunch of people are getting into Bitcoin right now, that's going to correspond with the increase that you're expecting to see in Bitcoin?
These price fluctuations have nothing to do with retail investors. Some you know, a few hundred people or a few thousand people that bought Bitcoin got lucky, basically. They're just like along for the ride. Retail investors are not pushing these prices up. It's impossible. There's no way.
But I'm saying, if you think that people are dumping gold right now to get into Bitcoin, wouldn't that correspond with the increase that you're expecting to see in Bitcoin?
Yeah, it would. And the decrease I'm expecting to see in gold. But what I'm saying is that Bitcoin isn't increasing in price because a bunch of idiots are out there mortgaging their houses. That's not why Bitcoin is increasing in price. Right? Bitcoin is increasing in price because some people with very large liquidity pools, like trillions of dollars worth of gold, are increasing the price of Bitcoin.
Right.
Right. Transfer of wealth from one asset class to another, but basically has the same fundamental principles. Who the heck's gonna want a bunch of fucking metal? Like, it's useless. 20 years from now, 50 years from now, nobody's gonna want gold.
Well, you don't want to put it in your teeth?
No.
Old grills.
Right. So people own gold because it's a secure way to have liquidity that's protected from governments, inflation, basically. Bitcoin is just the new version of gold, right? And I know it's kind of cliche that people are saying that, but that's actually what's happening. And people think it's just a conspiracy or like, oh yeah, that's really cool, digital gold or whatever. But literally, people, my belief. Yeah, of course, I can't verify this because I'm not in the dark room with cigars. But my belief is that whoever owns all that gold is just, getting into a digital version of stable liquidity.
It's all made up anyways.
It's all made up anyways, right? Gold is the price of gold because people say it's the price of gold. Yeah, they just agreed. Yeah, it's like, well, what is dollars backed by? Well, it's not backed by gold. Okay, well, what is gold backed by? Well, nothing, right? The gold's not backed by anything.
It's shiny.
Yeah, but who wants shiny metal anymore, right? This is not the 1800s. Let's get real. I mean, somebody owned all that gold way back. I mean, somebody owned all that gold way back when, right? And now they started to realize, hey, gold is not going to be around in 100 years. So if we want to maintain our wealth long term over the next couple hundred years, we can't keep gold.
It doesn't really have any practical value, and it's a pain in the ass to move.
All right, you want to go to the final point, which is timeline?
Sure.
All right.
That's bedtime.
Yeah. So this one's a little bit more contrived, just because we don't have enough data, but it's a good enough guess. So hang on. Sorry, I have to find my right. It's like I use this tool all the time. I still don't know where the right ones are. Here, date range. All right, so we're looking at the time periods between two all-time highs, basically, which is an estimation of like cycle length, right? So this one was 903 days. The next one is 1,470 days. And so now I'm trying to estimate like when the next one will be, right? So if I take this one, 1,470, and I divide it by 930, I'm going to get like a ratio. That's not right, but that's not about right. I must have drawn the line wrong. 1,000. Yeah, I did. Thought it was different though. Maybe I'm on the weekly scale. No, that's fine. Let's just 903. That's why. Yeah, right. So we get this number 1.672, which is really close to the 1.678. So we actually could see this being a little bit longer than I'm guessing, but let's just go with this number right now. Right. So then what I do is I'm going to
mean to reverse that.
No, I'm getting a ratio. So the time frame.
You said 7.2, not 2.7.
Yeah, 2.7. I guess I'm saying that 1.6. It's really close to 1.618. I guess that's what I'm saying, right? Which we already said before was the number that traders use.
but let's just go with this number for now. Or screw it. Let's just assume that this is 1.618. So if I multiply 147 times 1.618, that gives me 2,370 days. 2,370 days. Right, so that brings us at, I guess, about April 2025. I'm not sure why those numbers are different than those numbers I originally.
No, that's 2,700, not 2,370.
What is it? 2,378. God, I'm so bad. I guess I'm just getting tired. 2,370.
Yeah.
Okay, there.
No worries.
Oh yeah. Okay, that's about right. June 2024. So I had like August or something like that. Yeah, so we're looking at, June 2024. We're going to be at, $200,000. Or I'm guessing 222, but I think I've done the lines here are like really sloppy because I did them in a hurry.
Okay, that makes sense.
But yeah, these lines. This is the chart. Which is like much more cleaned up. Right, the lines are done much better, and I've got 218. The other thing to consider here when you're also looking at like exact high points is something called like a psychological value. And so like here we had psychological high point being at 1,200. So it was really close. So it just, it's not going to go beyond that number right here. Psychological number was 20,000. So it didn't go to 20,000. Here, I'm guessing the psychological number will be 225. So it won't go beyond 225. It'll probably go just below that. So like either 220 or 222 or something like that will probably be like the max. Right, and then these little call outs are just like what people are going to be thinking at this point, right? So when we were at this level at 19,000, they're like, oh, we're going to 100,000, and then it crashes, right? And now like we're at the low, right? We have a chance to buy at 5,000, and people are like, well, we want to buy it for $1,200, right? Well, they're not going to get it, right? Just like when they were here at $200, they're like, oh, well, we want $33, which was the previous high, It's not going to go to the low isn't going to be the previous high because it's logarithmic, right? The other thing that's happened, which is really funny to watch too, is when you get this long-term trend line kind of like drawn here, and then it breaks, right? Which happens every single time because it's a logarithmic and we have to draw a new trend line. It breaks and they're like, oh my God, the long-term trend line is broken, like it's going to zero, and then it just sells off like crazy, which is basically what just happened. The long-term trend like broke and then it just sold off like nuts, like minus 60%, which is perfect. Like we had it. It's like a pure gift. Like we had a chance to buy here at 3,400. Now we're getting a gift of a price here at $55,000. Like so freaking lucky. I literally never thought I would see $5,000.
I remember we talked about this. You said it wouldn't happen again.
I didn't say that.
Yeah, you did. Last time it was low, you told me to buy, and you're like, "This is going to be the only time."
I don't remember saying that. Anyways, so like once it hit here, I was like, oh, that's it. Like we're not going back to that point again. But it did here. So I'm not going to miss the opportunity again.
I didn't look at its value. I can't believe it's that low again.
Bro, like I'm telling you, it's selling below the 200 weekly. Like freaking buy it.
I'm trying. I filled out my wire transfer and sent it to the bank and everything. So I'm just waiting on them.
Like a couple of days ago, I was actually able to buy some at 4,500. Like I couldn't believe it. I was like, oh my God, I just bought Bitcoin for $4,500.
If I had more money, I would put more into it.
Yeah. Anyways, you get what I'm saying, right?
Put too much more.
So like literally below this line here, it's like so cheap. It's like retarded cheap. And of course, everyone's selling because they think it's gonna go, whatever, $1,200. Stupid people. Stupid retail traders. They're not they're not affecting the price of Bitcoin. They're stupid calls. Right, but that's all you hear online right now. You're like, oh, Bitcoin is crashing, it's going to zero, or oh, Bitcoin is going to $100 million. And it's like, it's all just noise. Forget all that shit. Just draw the chart.
Doesn't sound like you can trade short term. You just break yourself.
You can, but it's much harder. So, but I'm not pitching any of that stuff. Like right now, I'm in this trade right now. I'm gonna probably sell at 6,400 and then try to rebuy at 48. But shit can go wrong. It's a lot easier in short-term trades. So, and you have to know how to get out of them. So, unless you've got a platform and a strategy and experience and know how to do that, like just don't even try it, right? You know, just be an investor. Don't try to be a trader. Just buy and hold. Sell at the top.
Okay. Anything else?
No, as long as you guys understand it. I hope you see right now that like Bitcoin is literally one of the best investment opportunities you'll ever have in your life.
It definitely seems like it. I'd probably be a bad investor if I wasn't at least slightly weary of anything that anytime.
Oh God, my problem is the opposite.
Anytime anyone says something's a sure thing.
I'm not saying that's a stupid thing to say. I'm saying this. There's no reason to believe. There's
Saying it's a good bet.
There's no indication to suggest that I'm wrong. There's literally not a single indication.
Yeah,
these numbers are lining up with like laser precision. I don't see any other chart out there right now that is this accurate.
But doesn't that make you more concerned?
No, that makes me more confident. Why would that make me more concerned? Like the better it lines up, the more confident.
It's just too good to be true. That's all.
Right.
Yeah,
exactly.
That's why all these people are selling right now. They're like, oh no, it's too good to be true. Like all these guys, like I saw this guy who was like doing crypto. He's supposed to be like Crypto Doug, like whatever his name is. Hang on, let me show you. He's like supposed to be an influencer. Let me show you this guy. What an idiot.
But I guess my point is
this guy was like, oh, super Crypto Doug, telling everybody how to buy and sell Bitcoin, all this bullshit. And today he's like, oh, I'm quitting Bitcoin. I'm like, bro, like, what are you doing? Like, it's like either the guy is like literally just like scamming everyone and trying to get everyone to sell so that he can buy all the Bitcoin, or like this guy is literally really dumb. It's got to be one of those two things. There's no way that this guy is just quitting. I just don't believe that this guy is too smart. I'm telling you, like people are just trying to get Bitcoin at the cheapest possible price.
Have you read The Intelligent Investor?
No, I'm not gonna read that shit.
Okay.
I'm just gonna look at charts.
I have not gotten all the way through it, but one of the things that it talked about is crazy, like how easy it is when you're looking at a ridiculous amount of data, because on the stock market as a whole, there is a ridiculous amount of data.
Mm-hmm.
And if you slice and dice the data over a period of time, you will inevitably find patterns. And so I'm not saying that this is not a legitimate pattern, but I do think that it is easy to find patterns in this quantity of data. So I guess I feel like when you see something that is this.
Yeah, but look, how did I know to short Dow Jones at 28,000, which I did?
No, I know you did, and I feel like your actions have proven that what you're seeing is real. But I'm just saying, at this time, it's so precise that it.
Yeah, but nobody knows how to do this, right?
But how, Josh? There are people that have been doing this for 40 years longer than you, and it's what they've been doing for their full-time job for.
Yeah, and they're making millions of dollars.
Some of them are, not all of them.
I mean, I just started trading like 2 years ago. Okay, so I'm definitely more at my infant stages. But yeah, if I had been doing this for 10 years, I would be able to call exact tops and bottoms on every asset in the freaking stock market, right? And everybody that wants you to believe, oh, you know, it's all luck and it's all just noise. It's not true. It's total bullshit. 100%.
The people that do this for a living don't believe that it's luck. they absolutely believe in their algorithms, and there are investing firms that are primarily computer-based algorithms that buy and sell without any human interaction. So I guess if there are people that are doing this for a living for decades, why are they not seeing the same patterns? The patterns.
Who said they're not seeing it? Who said that everyone isn't buying Bitcoin right now? Trust me, they're buying Bitcoin. This is investors buying Bitcoin. This is them like trying to push the numbers off the cliff so that everyone panics, right, and sells all their Bitcoin at the bottom. It's not an accident.
Yeah.
This is them short squeezing so that they can pull liquidity out of the short squeezer, right? So that they sell, right, and they're buying all the way down. Yeah, computer algorithms are doing this, but the computer algorithms usually operating on the low time frames in order to push the price in their favor, at particular higher scale time frames.
I'm not saying that a computer algorithm would find this, but I'm just saying, like, if you've been doing this for 2 years on the side, I am not sure that I understand people that do this full time when have identified the same thing.
Yeah, but you don't know that they haven't, right? That's what I'm saying. Go talk to a quant and ask them what they think of Bitcoin. I guarantee you they're going to tell you to buy it. Right? All these people like this crypto Doug, he's an idiot.
It sounds like you're saying it's not a for sure thing, and yeah, of course it's not a for sure thing. Nothing is. It's a good bet, but you're still betting.
It's a damn good bet. It's
Yeah,
literally the
but
best
you're still
bet ever.
betting. Absolutely, everything could go wrong. It could crash, and of course, but that's anything.
Yeah, but I mean, why even like have that thought whatsoever? It doesn't serve any purpose. You make calculated. You make
devil's advocate. This is
that's not. To me, that's not a. To me, it's not a wise idea to trade against patterns that are working. Right?
Yeah.
So if you throw out this pattern, then what are you going to trade off of?
Yeah, nothing, right? You can just like, oh well, the price is going up. Oh, the price is going up, so I guess it will keep going up. Like that's what most people do. That's a horrible idea. Don't trade against a pattern. Trade with the pattern, right? Until the pattern is broken, trade the pattern.
Yeah, I guess the problem is when patterns become well known, then the market just gets saturated.
Yeah, but it's not like everybody knows this. Like a massive majority of people don't.
But I guess my question is how, like, if this is such a not a sure thing, or somewhere between a sure thing and a really good bet.
But look at the news right now. Like,
everyone know this.
Look at the news right now on Bitcoin. Everybody's telling you to sell Bitcoin, right?
Right.
Everybody's panicking.
Yeah.
I just read an article that said Bitcoin is undervalued.
Oh, okay.
But I'm just saying, the pattern that you just showed us is like definitely not obvious by any means. I mean, it took us
2 hours, yeah.
2.5 hours.
I've been looking at this Bitcoin chart. Let me tell you something. I've been looking at this Bitcoin chart for 2 years, and I only saw it like a week ago.
Yeah.
It's not obvious, I'm telling you.
And it's the primary thing that you've been looking at, has always focused on crypto.
It's always crypto, right? Literally thousands of hours looking at this chart, and I never saw it.
Okay.
Definitely financial investors who know about it.
Yeah, that's what I'm saying, right? People that are more experienced.
Advisors, not investors.
Yeah, I mean, how do you think everyone knew to buy right here? I mean, come on, like. They fucking knew. They knew what's going on. They were already in on it.
I guess my takeaway is that there has to be a reason behind it, or there wouldn't be a pattern.
That's what I'm saying, right? It's not. I don't know what that reason is, right? I'm just speculating that basically, liquidity is moving from gold to crypto. That's just a total guess, right? I have no idea if that's going to happen. We will know that in like 10 years, but by that time it'll be too late, right? So we don't know why it's happening. All we know that it is happening.
Okay.
Why am I just now getting text? What the hell is going on?
Yeah, so like buying
Green bubble
Bitcoin,
machine.
buy Bitcoin now is like literally buying Bitcoin at $260,
Yeah, but how much is Bitcoin right now
like 5,300 something.
for one Bitcoin?
Yeah.
But
Yeah.
Jazz, you don't have to buy a whole one if you.
No, you can buy a fraction
I
of
don't
a
know what
Bitcoin.
Josh's suggestion is on this, but there are means to buy a portion of one.
Yeah, you can buy however much you want. So look, just think of it like this: like, how much money do I want to have? Like, 4.5 years, right? Just to divide that by 45 or 40, and that's how much you should put in.
I don't have that much.
Well, then, put in whatever you can.
No, yeah, I'm just saying. But, just have to save money so you're prepared for the next opportunity.
Yeah, because
you get lucky.
This opportunity will be gone in like 2 or 3 weeks max.
Yeah.
Okay, so you don't have, how many of you could just like collect a bunch of money in 2 or 3 weeks? Nobody, right? So if you weren't already prepared, then the op's gone, right? You're gonna pay twice as much for Bitcoin, or 50% more for Bitcoin in 2 months than you will right now, which means a lot less than a 40x. Now you're going on only like 30x. All right, and if you buy it at 10K, now it's only 20x.
Yeah, I would put 10 grand in it if I had it to spare, but I don't. I don't have 10 grand. I can leave lying in a bucket for 5 years.
Just like go rent yourself out on the street corner, like go do whatever it takes.
Just go make like 20 G's real quick. No big deal.
Yeah, look, when everybody else is
on the phone, Josh.
What?
Gideon is on the phone.
Oh my gosh. Well, he doesn't know what I'm saying. So yeah, I mean, you don't want to be like mortgaging your house when it's, skyrocketing up and it's, Bitcoin is 150,000 and the news is like, oh my God, Bitcoin is 150,000. Everyone's freaking out, right? You don't want to do that. You want to buy it when everyone's like, oh, Bitcoin's going to zero. I'm canceling my YouTube channel. This is the end. Like coronavirus. Ah.
Okay.
What the heck? I'm receiving y'all's text from like 3 hours ago, 2 hours ago.
Yeah.
Does he have a green bubble machine?
What is that? What is that, an Android?
Yeah.
Yes. A green bubble machine. Only people with iPhones know what that means. If you're green, that means you don't have an iPhone.
I know. Believe me, I know all about it.
So yeah, the main problem right now, that's the reason why I wanted to sit down with you guys and like walk you through it, like literally step by step, because otherwise I'm just like yelling at the wind, buy Bitcoin, and you don't understand why. Like you're just like, I don't understand it. Why is it going to go up? That sounds risky. Like that, it's not based upon anything. Like now you at least you can see why it's a really good investment right now.
Yeah, for sure.
Yeah, it makes sense.
Right.
Mad my XRP is worth nothing now.
No, XRP is going to go crazy. Like just wait for like 4 years. I'll probably hold Bitcoin for like 4 years and swap to XRP and make even more money.
I'm probably gonna dump a couple hundred in XRP too.
No, don't buy XRP right now.
Why? It's
Because
at like 14 still.
Yeah, but I know everybody just looks at the price like, oh, it's cheap, Right.
Well, no, I looked at like 5-year graphs, and that's like pretty much the lowest it's been.
Well, the only question you should be asking right now is like, should I buy Bitcoin or XRP, right? And what I'm
still at 0.15.
Yeah. So look, I'm bringing up the XRP BTC chart, right? So this is basically like the ratio of Bitcoin to XRP, right? So what we're seeing right now is like a bunch, like at least 4 more corrective curves. Remember I showed you the ABC corrective curve? ABC, right? So we've got an ABC going on here right now. So we're going to see something like this, right? And then we're going to see another one right here with this. Right, it's going to keep going down. Right, so it means that if I buy XRP now, I'm going to have less money than if I buy Bitcoin now. all right, all the way up until this point, right? And then at this point, once it's done correcting, then the ratio of XRP to BTC based upon the previous one.
Isn't the purple line the base value and it's already below it?
Yeah, so now if we look at a much larger time scale, we can draw a line like this, right? We're gonna see a corrective curve to the upside, probably up to here to like 40,000 sats. Yeah, maybe 50,000. So the ratio of XRP to BTC is going to continue to go down until it's done correcting, and then it's going to skyrocket up. Okay, so don't buy XRP right now. Buy Bitcoin, and then trade Bitcoin for XRP once XRP BTC is done correcting. All right. So yeah, at least 3 more corrective cycles. That's what I'm looking at right now. So I'll probably buy it when it's like down here at 500 sats.
Yeah, this is not log, so how do you even know? Like, why do you think that the base price is lower?
Because we saw XRP do the exact same patterns before, right? Corrective wave down, right? Corrective wave down.
Yeah, but it's already corrected a lot.
But it's not done, right? That's what I'm saying. It's still in a corrective pattern. It always corrects back down to 700, 600, 500 sats. There's no reason for me to believe that it's not going to correct down back to this level. There's no indication of that.
Well, it hasn't since 2017. And
no,
before that.
Look, this is what it does. It shoots up and then goes all the way down over a long-ass period of time, right? So whatever, 3 years, right? And then it shoots up and then it goes down over a long-ass period of time, right? And the cycles are increasing, just like Bitcoin is. So it's going to keep going down. Just buy Bitcoin.
I just think it's going to rise after B. That's all. We'll see.
It will. I'm not saying that it won't.
I'm talking about like in before 2021, not that far over.
When XRP gets down to 500, 600 sats, I'll buy XRP. Until that happens, I'm not touching it. Right? Because I'm going to be able to buy more XRP if I hold Bitcoin now than if I just buy XRP right now. All right, I'm going to be able to buy, let's see how much more. I'll be able to buy 80% more.
Oh.
No, wait, that's 80%. That's 4 times. Yeah, it's like 4x. I'll be able to buy like 4x more. Yeah, I'll be able to have 4. So if you buy XRP and I buy Bitcoin, I'll have 4 times as more than XRP when this thing shoots off than you will. So yeah, you're still going to make a lot of money. But I'll just make 4 times as much.
We'll see. We'll see.
Bro, just look at the chart. Don't fight the chart.
I'm not fighting the chart. I'm just drawing different conclusions from it than you are. Although articles seem to fucking agree with you. It's going to drop to 0.5. It's going to drop another 10 points.
Right now, though.
No, USD value of XRP will go up with Bitcoin. So that's not what you should be thinking about. You should be thinking about which one's going to go up more on a percentage basis, and that is Bitcoin.
Even if he buys right now, once it fully corrects, he would still be up anyways.
Yeah, that's what I'm saying. He just won't be up as much. You're going to make money.
Only if you're right.
I'm not wrong. The chart is not telling me I'm wrong.
I just need to spend some more time looking at stuff on my own.
Yeah, okay.
I can't make the calls you're making.
Yeah. Yeah, I mean, look, at some point it's going to correct back up. We're going to go to C wave here, right? Which probably is going to be like maybe 3 months. But, if I want to try to catch that C wave up, I'm going to probably still wait till it comes down to like 1900 sats, like right here. I'm not going to buy it right now. And then I can swap, and then that once it hits like this point, then I can swap back to BTC and then let XRP go back down. I mean, I can play these C waves. I'm not saying I can't do that, but you know, this is day trading. You know, you're not trying to do that. So what I'm telling you to do is just buy Bitcoin and then wait, hold it up until this point, and then swap your Bitcoin for XRP.
Okay. I'm getting tired myself, so
yeah. All right, so don't buy gold, don't buy stocks, don't buy XRP. Literally,
what
don't
about
buy
Ferrari?
Don't
Is
buy
Ferrari
any.
a good stock?
No, the only thing to buy right now is Bitcoin.
Oh man. All right, guys. I'm calling it. It's pretty late over here, and I still have work.
Yeah. Gotta work.
All right, if you guys have any questions, whatever, text me.
All right. Thank you, Josh.
All right.
Yeah, I
See ya.
appreciate it, man. Have a good
Night.
night.